Yeah, I think so. I think it's very likely that OPEC will need to act, otherwise the market will be in very significant surplus, and this is what's now pushing prices down. Moreover, I think that the market now expects OPEC Plus to act. So if there is no action, the prices may go down further.
And in terms of the actual impact that you're estimating from the coronavirus, that China accounts for 15% of global oil consumption, I believe, and Dan just said 70% of that is from OPEC countries. What are you estimating in terms of the impact on domestic oil consumption in China?
It's very difficult to say for now, but take into account that it's 15 million barrels of oil per day of consumption. In absolute terms, if we're talking about February, it could be as bad as a couple of million barrels of oil per day of lost demand. Now, if we talk in the context of the whole year or first half of the year, it could be up to several 100,000 barrels of oil per day, which is pretty significant, taking into account that the expectation for this year, at the beginning of the year, for the growth in the oil market was about 1.3 million barrels of oil per day. So a very significant part of the demand growth could evaporate because of the coronavirus.
What does that mean for phase one talks? Because one element of the agreement was that China would pledge to buy, I think it's up to $50 billion more of energy products from the US in crude and other formats as well. It seems unlikely now that they're going to be able to meet those targets, especially as you mentioned that demand for this imported oil will inevitably subside in the next coming months, and that will lead to a surplus of inventories back home.
Yeah, absolutely. But I also think that potentially this coronavirus situation could result in some kind of an easing in relations between China and US. I hope that countries will be more cooperative, taking into account the situation.
And looking at the price of oil, where we're at right now, we've been following it very closely, but clearly we're down about 20% from the highs we got to in January. We started the year off with maximum geopolitical risk, and now everyone's very bearish on the demand outlook. Do you think where the price of oil is right now sort of accounts for both of those variables, or is the oil market being too pessimistic from the fundamental side of things?
I think there are very good chances that Brent price would remain in 50-60 range for probably the next several months until at least the situation normalizes. I think it's probably will not go down below 50 for two reasons. First, OPEC Plus will act, and in particular Saudi Arabia, I think, is worried now about the level of oil prices because it needs prices in excess of 80 to balance its budgets. And the second reason is the responsiveness of US shale production. If oil prices fall below 50 for some period of time, I think we would see decreased activity in the US, and US shale production would stop growing, and this would rebalance the market.
Hi, I'm Joanna Bersecci, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.